Okay, I want to show this setup I took yesterday as an example of how to factor context in when you're managing a trade and the significance of that. So context not only when you're entering, but looking at the context to inform your exit. So this is what I was looking at yesterday. Yesterday was Friday, it's Saturday morning right now. I saw this bullish bat on the NASDAQ 5-minute, and so, trying to move the chart right around to where I was at. So it's probably right around here when I saw it. And so, of course, right away, the first thing I did was flick to the 15-minute to take a look at the context. So it's totally obvious bear trend. Now, not that I put too much stock in that. Trend can turn on a dime. No big deal. But in terms of just stacking your odds in your favor, this is probably not the end of this whole big trend. This is not a super high probability buy. And especially when you're at the lows like this, even if there is a turnaround right here, a lot of times you're going to see this low get poked out before it really gets going anyway. So this is really not the best situation to be buying. As you can see, it blew through the bat ultimately. But what makes this trade a good example is that I actually still got the profit on this trade. And I think most people probably wouldn't have, and so that's why this is important. I think most people would have lost and would have been lucky to even break even on this. So I want to show you what I did on the 1 minute actually. So here's the 5 minute. This is the primary time frame. 15-minute was the distal. We're using Scott Carney's terminology here. And then the 1 minute would be the proximate. So I'll keep formation seeker on the 5 minute. Okay, so this is backed up to where I was at when I put on the trade. So right here, we're right around coming into the PRZ at this point. And even though I know the 15-minute didn't look great, and that almost ruled the trade out for me, I saw this really nice bullish divergence on HSI. So in this case, I went ahead and went for it based off of this. In the future, it might be better to just wait for everything to line up perfectly, but in this, I hadn't taken a trade yet at that point, so I went ahead and grabbed this when I saw it, and there's a really nice condition for me. I love to see this on HSI. You've got a deep test, and then a really shallow test. Clear divergence. I mean, really obvious divergence here. With price, and then you've got HSI testing 50 in between these two tests. And it doesn't matter that it tests multiple times or anything like that. It really doesn't matter to me. I just want it to at least get up to 50 in between. If it doesn't at least get to 50 in between, that's telling me that it's like very suppressed sort of movement in HSI. And this is all straight out of Scott Carney's Volume 2 type of stuff in reading RSI. So anyway, bullish divergence. And this is what I see. Okay, so good bar, good sign. Okay, sideways, another really good bar, so I'm feeling really good at this point. But having looked at the 15-minute, I specifically remember saying these words out loud to myself. I said, I gotta manage this really aggressively. I said that to myself because I knew this is a bad-looking 15-minute chart, so I can't necessarily expect the world unless I've got some other reason lining up. I mean, because there's certainly lots of cases where I'll take a big fat counter trend position, but this was one of those times where there's just nothing here other than this really nice 1 minute HSI to tell me that I should expect much out of this trade. So I said to myself, I got to manage this really aggressively. So I drew out my levels. I had the 382 and the 618. And in this case, I thought to myself, no, yeah, I'm definitely just going to take it right at the 382. It happens to be right around these highs. So I thought, okay, I'll take it right when it gets around these highs. But at this point, I'm well into profit, so I'm feeling pretty good. Okay, here we are. Okay, next bar closes down, and then it's just straight down all the way to new lows without looking back. So if in this kind of scenario, If you had waited to see what happens at the 382, it would have been too late. You wouldn't have gotten out until probably right here at the best, and realistically it probably would have been even further down from there. It probably would have been more like around here. So, you know, basically only a few ticks of profit in this case. Now, I am scalping on the 1 minute charts, so this is kind of crazy time frame. This will be a little easier on an hourly chart, but you still get the same idea. There's no time to see what happens at the 382 in this particular case. And the only reason I really knew that, the only reason that I confidently got out right here as opposed to waiting or managing or going for the 618 or even, you know, new highs or something crazy like that, I just took a really aggressive profit because I knew that the 15-minute chart made this trade look dicey. So the importance of that is to look at this and think to yourself, if I had taken this trade, would I have gotten a profit out of it? Would I have gotten a break even? Or would I almost certainly have gotten a loss? You know, in the past, that's what would have happened to me until I started paying attention to what Scott was doing. I would notice a lot of days, sometimes we would be trading the same instrument in the same patterns, and I would be down a few hundred and he would still be up. You know, and I would talk to him and be like, yeah, I got blown out at that bat. How about you? And he's like, oh yeah, I took that bat too. I'd be like, yeah, so how much are you down? And he would be like, oh, I'm up a few ticks, just up a few ticks. And I think, how is he up when I'm down? You know, I'm down a bunch and he still made money from that? Doesn't make sense. And this is the kind of stuff that he's doing, is that he knows when to manage aggressively. He knows when to bail out. And in this case, it was simply a matter of placing my limit order and knowing that that's it. I'm just putting in the limit order and I'm not even going to look and see what happens at the 382. And that was really key in this case. So just wanted to show that as an example. So there's what the rest of the day and night ended up looking like. So to think that I was actually able to pull a profit out of that is pretty cool. I mean, that's pretty crazy right there. And if you find yourself starting to do that kind of stuff, then I think you're in good shape. In my opinion, that's a sign that you're getting to be in really good shape. Because now think of next time when you're trading with the trend and you catch it. That's where you really start to bank. So I hope this example was helpful. Let me know what you guys think. I know this channel is really young. I'm just kind of doing this more like as a journal style right now. But in the future, I plan on posting just more straight up educational videos and, you know, things more like that, just explaining terminology and everything. I'm not really explaining many things like that right now because I'm starting with the assumption that you already have an intermediate understanding of harmonic trading. But if you don't, you're definitely going to want to check out the Harmonic Trading channel and website and all that kind of stuff. Look up Scott Carney's work, Volume 1 and 2, and that'll get you started with the fundamentals of this method. Alright, hope this helps. Let me know what you think in the comments. Thanks.